Hello, good morning, everyone. Welcome to join our 11 a.m. Monday research morning call. Today we got several stock counter updates. We got Meta Platform, Broadcom, Grand Venture Technology, Valuetronics. We also got Semicon for our macro sector outlook and our usual SG Weekly as well as technical analysis. So just to flash the usual disclaimer, everything is for educational purposes only. So I guess we're going to jump right into it. I'll pass my time to Serene for the Meta platform.
Thank you, Helena. And good morning, everyone. And thank you so much for joining the call. I will start by providing updates for Meta platform. So the company continued to have a strong momentum in the user growth and monetization, supported by their investment in AI. The Meta currently has more than 3.4 billion daily active user, and the advertising business is actually still their main source of revenue. First quarter of 2025 ad revenue growth actually slowed down, but it's remained strong at 16% growth year-on-year at 41.1 billion. It's mainly driven by the e-commerce vertical. The year-on-year slowdown was because of two reasons. The first one is because China-based advertisers were promoting a larger volume of game title in the first quarter of 2024, and the second reason is because of the conclusion of the US election. Due to the higher advertiser demand under the better ad performance powered by AI, the average price per ad also see a 10% growth year-on-year. The company also acknowledged they do see a reduction in ad spending from Asia Pacific region because of the tariff implementation, but they also do highlight that they also see the spending as being redirected to another market. So the narrative is similar to Google. We actually do believe the overall impact will be modest on the longer term basis because the Meta is also shifting towards ad efficiency with the AI innovation. We also do believe Meta ad revenue growth will continue to be resilient because of their ongoing enhancement in ad recommendation system powered by the AI. So we increased the FY25 ad revenue by 4% and expect a growth rate of 18%. And then beyond the advertising, we also do see the strength in business messaging and threads. So family of apps, other revenue actually grew 34% year-on-year, led by WhatsApp business platform and also Meta Wi-Fi subscription. WhatsApp has more than 3 billion monthly active user, and it also currently has the strongest Meta AI usage among all the apps. As for threads, the monthly active user also grew quite significantly at 103% year-on-year, and the company actually has started to test Llama in the recommendation system. For this business segment, we actually maintain the FY25 other revenue growth of 20% because we do see the AI integration to the product. We started to boost user time spent across all apps and also increase the Meta AI usage. And moving forward, the Meta will actually continue to make AI-driven investment, and we actually believe the effort could help to boost a long-term monetization opportunity. And Meta actually increased their CapEx guidance by 10% to 64 billion to 72 billion. This is actually almost on par with other hyperscaler with a very large client base such as Google and Microsoft. The investment mainly to build the AI infrastructure to support the core business. And also we do believe the spending in the AI infrastructure and LLM development will continue to provide a scalable monetization potential across all the apps via its either growth or the premium service. And then in terms of the revenue outlook, Meta guided a revenue between 42.5 billion and 45.5 billion for the next quarter. And then overall, we actually do increase the overall revenue forecast by 5% because of the resilient ad revenue, and the second one is because of the expanding margin, which is currently standing at 41%. We maintain an accumulate rating and increase our target price to $720 from $640 with a higher terminal rate of 26%. because we do believe that the effort in building a stronger fundamental AI infrastructure and LLM development can actually they can actually utilize it to for the product enhancement, so that they can fully present a great monetization opportunity in the long run with the lower cost. Thanks very much. That's all from me. I'll pass the time to Iqbal.
Thanks, Serena. Yep. I will present on Semiconductors first quarter update. Yep. Next slide, please. Yeah, so for semiconductors itself, for all the companies, we try to group them into different categories. For example, processors-wise, we have Qualcomm, Intel, AMD, Nvidia, Broadcom. For memory, Micron, Samsung, SK Hynix. For equipment-wise, we have ASML, Applied Material, Lam Research. And for foundry, we have TSMC, as can be seen in the table itself. Yeah, so let's talk about processors first. For within processors itself, generally they all did quite well year on year in terms of their revenue performance, and their guidance for the next quarter itself is also quite positive. I guess the anomaly will be Intel, because for the quarter ending March, their revenue was quite flat year on year, negative 0.4, and their guidance for next quarter itself is a negative 8%, because this is because they are still continuously losing PC market share to AMD itself, and their foundry segment is also not performing as well as TSMC. As for other processors company like the ones we cover, AMD and Nvidia, they actually face one-off US export controls, because the US actually put in a regulation to say they cannot export their most advanced chips to China itself. So Nvidia actually took a $7 billion hit to their full year revenue. And AMD took a $1.5 billion hit to their full year revenue, which is about 5 or 6% of their total revenue. However, even with this impact itself, they are still guiding a very strong year-on-year growth. As you can see, for AMD, they actually guide a 27% year-on-year growth for the next quarter itself. And Nvidia, they actually guide a 50% year-on-year growth for the next quarter itself. And this is being driven by the continuous ramp for GPU. For AMD wise, it will be the MI 325 GPU, and for Nvidia wise, Blackwell GPU is still continuously ramping. As for memory companies wise, we can see Micron, Samsung, and SK Hynix also generally perform quite positively. The worst performer among memory company will be Samsung, because they are, even though high bandwidth memory is still a revenue driver for them, their revenue is being dragged down by export controls on the AI chips, as well as the weak SSD demand. Yeah, so I think generally across the memory companies itself, they reported strong high bandwidth memory demand, but they it's being offset by the weak SSD demand across memory companies. So what is SSD? It is basically the non-volatile memory products. For example, you can think of it like your thumb drive, which still continues to retain data even though there's no external electric source. Yeah, so that is the SSD segment. However, all companies do see a PC segment recovery towards the low to mid single digit expected in the second half of this year itself, because there will be an end of support for Windows 10 in October 2025. So these memory companies are expecting that corporates will actually replace their old PCs with the newer version. And the newer versions PCs actually need a DRAM memory of 16 gig to run the AI PC processors. Yeah, so that's why they are seeing this recovery towards the end of this year itself. Yeah, so we do see that, as you can see in the bottom right-hand corner chart, that is the combined capex of the hyperscalers. We take the data from Google, Meta, Microsoft and Amazon. So they have still continuously pump in capex to advance their AI investments, even though DeepSeek came out at the start of this year. Their capex still experienced a record 62% year-on-year growth. And we do think that more than half of this capex is being spent on advanced AI chips, as well as the networking technology, as well as the GPU racks. And the forward CapEx guidance is also very positive, and we estimate it to be around 59% year-on-year increase for the next quarter itself. Yep. Next slide, please. Yeah, let's talk about equipment and foundry. For equipment itself, also generally a very positive performance for ASML, Applied Material, and Lam Research itself. As you can see for Lam Research, they gave a very positive guidance for the June quarter itself, and this is because uh they do see that on top of the foundry logic investments by TSMC itself, they also see memory equipment being constantly replaced and upgraded by their memory customers itself. Yeah, so their guidance for June quarter is actually 29%, which is more than their actual performance for the March quarter itself. As for ASML and Applied Material, they are more conservative, but I think we are still very positive on equipment companies because TSMC has maintained their CapEx guidance for the full year for 2025 itself, with 70% budgeted for advanced process technology, and we do think that this will continue to benefit equipment players like ASML, Applied Material, and Lam Research. And for TSMC wise, they also have a very upbeat guidance for the next quarter itself. They guided a 38% year-on-year increase, which is higher than their actual revenue performance of 35%. And this is because they do see a very strong momentum in AI accelerators demand. So AI accelerators includes GPUs, advanced CPUs, as well as high bandwidth memory. So they see the revenue from this segment to double in 2025 compared to last year, as well as to reach mid-40s percentage CAGR for the next 5 years. And they also do see volume production of 2nm chips to start in the second half of this year itself. Let's talk more about the chart on the bottom right-hand corner. So these are the revenue growth of the different groups of companies itself. As you can see, for Foundry, TSMC itself, from the yellow line itself, they are still guiding increasing growth rate for the next quarter itself. And for equipment makers also, they are also guiding an increasing growth rate for the next quarter itself. So we are still very positive for foundry and equipment makers. For processor and memory makers, even though their growth rate has slowed down, it is still at a very high percentage of growth rate expected for the next quarter itself at about 40 to 50%. Yeah. Next slide, please. Yeah, so all in all, this is the overview of the company's performance, stock price performance, market cap valuation. For AMD and Nvidia, we cover these two companies. Their forward PE is still within reasonable range. For example, for AMD itself, the 2-year forward PE is at 21, which is below average of the processor companies. And also for Nvidia itself, it's also below average for the processor companies. If you look at overall for the different groups itself, memory segment has the lowest forward PE, which means in terms of PE valuation, they are the cheapest among all the semiconductor companies. And I think Micron is also quite we are also quite positive on Micron itself because their most recent product, the high bandwidth memory, is being tagged to Nvidia's Blackwell GPU. So as the Blackwell GPU ramps up, Micron will also be benefiting from it. Yep. Next slide, please. Yeah, so that is all for the semiconductor quarterly update. I'll talk about Broadcom's Phillip on the ground as well. Next slide. Yeah, so Broadcom released the second quarter results recently, last Thursday. Let's talk more about their business itself. They are a company which supplies semicon and networking chip. For example, the Tomahawk and Jericho Ethernet switches, and also custom application-specific integrated circuit, which is also ASICs, and also XPUs, which can refer to GPU, CPU, and so on and so forth. Yeah, so what exactly is this Ethernet switch? Just to explain it further, if you visualize entire data center itself with all the GPU racks itself, Ethernet switches is the component which connects all the GPU racks together. So they are the ones that that sends data and memory across the board, across the different GPU racks itself. So it's like a kind of like inter-rack connectivity. Whereas if you talk about networking capability within NVIDIA itself, for example, their NVLink 72, right? That one is an intra-rack kind of connectivity. Yeah, so Broadcom provides a different kind of value to hyperscalers. Yeah, so for Broadcom wise, their revenue it performed 20% year-on-year increase, and they also guide their AI revenue segment, AI semicon segment, to increase 46%. To increase 60% year-on-year for the next quarter itself. Yes, currently their AI semicon revenue makes up about 30% of their revenue, and 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 they are guiding this positive increase because mainly driven by the Tomahawk Ethernet switches and also their routers itself. Yeah, so as hyperscalers scale up their capex investments, Broadcom will stand to benefit as well. As for their software infrastructure segment, this mainly refers to their VMware Cloud Foundation. So recently, Broadcom has finished the acquisition of VMware, and they they actually have this new subscription model whereby it lets customers run their AI workloads within uh on-premise itself. So what this means is that typically for a customer of AWS, for example, AWS will run the customer's AI workloads on their data servers itself. However, there's also some customers which prefers to run their AI workloads within their own servers itself to secure the data privacy, and also maybe they don't want to get trapped in hyperscalers ecosystem, for example. Yeah, so this is the value that Broadcom provides for the customers itself. It lets the customers run their own AI workloads on premise. And yeah, so this is what this infrastructure software is about. It is a subscription model, and Broadcom estimates that it will take about 1.5 more years to convert all customers to the subscription model, which will drive further growth in this segment itself. As for our outlook for Broadcom, because it has a more than 70% market share in Ethernet switch, which are crucial in data centers, and also hyperscalers are still continuously guiding positive capex guidance. This should drive revenue growth for the next few quarters. But I guess recently their stock price dropped slightly after the results because people may have been expecting more in terms of their guidance, and yeah, it's just that their guidance did not meet people's expectations. Yeah. Next slide, please. Yeah. So I'll be presenting Phillip on the ground for Grand Venture Technology as well. Yeah. Next slide. Yeah. So to explain further for Grand Venture Technology, they are a company which supplies parts and modules within semicon space, life sciences, electronics, aerospace, and medical sectors. So as you can see on the chart on the right itself, semicon actually make up the biggest proportion of their revenue, and it increased 62% year on year. So this is being driven by the strong demand for their high bandwidth memory testers, test equipment, as well as a bit of a revenue contribution from the new front end customers. And life sciences also grew 28% year on year because of the new wins in the automated sample preparation equipment space. And the EAMO, which refers to electronics, aerospace, medical, and other segment, also grew by 26%. Yeah, so uh for within the semicons segment itself, the contribution from new customer is still very small. For example, front end still makes up less than 10% of their revenue, and more than half of it is legacy products. So we do see management did guide that the front end customer contribution should ramp in 2027. And for Grand Venture Tech's margins itself, as you can see on the bottom right hand corner, the net profit margin actually decreased slightly compared to a year ago because they have higher sales for test head manipulator. So this is a component within the testing stage itself. Yeah, so this component had a lower margins uh for this quarter itself. However, Grand Venture Tech management did say that they negotiated with the customer for the following quarters for a higher price. So this should drive higher margins going forward. So regarding Regarding our outlook for Grand Venture, we do see the broader AI demand from the semicon sector for high bandwidth memory chips and front-end processors to benefit Grand Venture Tech. And they should also have a limited impact from tariff because less than 10% of their total revenue are from US exports. Yeah, so that's all from my end. I'll hand over the time now to Zain. Thanks.
Thanks, Ivan. Good morning, everyone. Talk about the technicals next. So first up, looking at the S&P 500 chart, last week they continued to rebound. For a week, it was up 1.5%. There was a breakout above the 5,170 horizontal resistance level, which it consolidated sideways after it retested the uptrend channel. And currently, price is also just trending a bit more sideways along an short-term upward support line in black and holding above the short-term 5 and 10-day moving averages, which are the red and blue lines you see in the chart. So for this week, I think we are likely to see it go higher to retest the next key resistance at 6,120, which is close to the all-time highs, as long as price can remain above this 5,970. Yeah, so for now, overall, the resistance zone is at 6,050 to 6,150 area, while support could be at 5,920 to 5,970 area. So that's all from me. I'll hand over time to Paul to talk about Valuetronics results. Thanks.
Yeah, thanks, Zain. So Valuetronics released the results actually end of last month. Sorry, I was away, so couldn't prepare the report in time. But in terms of the results, the second half results that they released was back to growth after 6 years. And what we mean by six years is that Valuetronics is a contract manufacturer, and they actually suffered for 6 years because of Trump policies. Their only manufacturing plant was in China, and they started to move the facility or build a new facility in Vietnam, so that helped them grow again. In terms of the results, it was within expectations. It met our forecast. The earnings would have been better. If you notice the chart on the left, earnings was only up 3%. But that was because they actually have this startup losses in Hong Kong AI investment called Trio. If you dial back about 12 months ago, they are investing in the GPU as a service in Hong Kong using China-made chips. And there are some startup losses here. We'll elaborate more. And so operationally, they actually did well. If you look at the EBITDA, it actually grew 36%, but because of the startup losses, higher depreciation, and also lower interest income because they have 1 billion in cash. As you can see, the interest income dropped 24%. In terms of the positive, revenue jump, like we mentioned, the highest in 6 years. Because the new plant, they used to have only one plant, a few plants are all in China, then they built a new one in Vietnam. And customers, at least now there's an alternative for customers. And now the Vietnam plant is almost as large as the plant in China. The negative is the Trio investment. So the Trio AI is that they are buying chips as much as 200 million Hong Kong dollars, which they can afford. I mean, they have like 1 billion cash. So they will use that and sell as a customer as a service. Right now, GPU as a service, right now, customers are evaluating the chips, and that's why the revenue hasn't come in. We're not factoring in any revenue yet because they actually quite tight-lipped and how much revenue they can proceed. But we guess there should be some revenue contribution and profit contribution from this. I mean, don't ask me why they actually decided to diversify into that, but they're working with a partner that has the expertise. They're actually providing largely the capital and some understanding of the technology so that hopefully in future they can participate in the manufacturing process. In terms of our outlook, we nudge our earnings a little bit higher, 2%. We lowered revenue because they still have a legacy customer product, which we believe it is the Philips shaver or Philips toothbrush, which I think is starting to phase out because these are old products, and that will still take a dent to revenue in 2026. But as you recall, this story has been about the 4 new customers they secured, and that has started to contribute meaningfully. Like we mentioned, the second point is that the growth in 2026 will be driven by new industrial customers. And like we mentioned, we haven't factored in any contribution. We downgrade to accumulate because we maintain our target price. We also lowered our Hong Kong dollar assumptions because the US dollar has been so weak. and the share accumulate has been downgraded mainly because of share price appreciation. The stock is now trading around 4% dividend yield, excluding the special dividend that they normally pay, with 60% of the market cap in cash. Next slide. So I'll move on to our usual weekly strategy. Just a snapshot on some of the key macro data coming out from Singapore. We had retail sales, which is generally quite weak. I mean, it's just hardly 1% retail sales, are nothing to shout about. Supermarket sales is actually a bit better. But the one that's doing really well in Singapore is still construction sector. So in terms of construction awarded, can be public and private sector combined. You will notice that the contracts awarded has spiked up in May and April, almost 50% combined. The payments means after you award, then you actually have to do the work, so that takes a bit slower, and sometimes there are issues with the site, so that will not be as strong as this, but it will eventually reach those levels. Another positive news at macro is at least bank loans in Singapore is still holding up. I think my colleague, I think Glenn will give more details when he releases banking monthly this week. It's starting to decelerate, but I mean, loans growth in Singapore is still holding up. It's like still 2.5-year highs. If you look at a year ago or something like maybe 1% or less. But the one that's negative is manufacturing is starting to decelerate. We see this in the US, we see it in Singapore too. In terms of US data, we also saw the payroll numbers. The interesting thing was almost more than half of the jobs actually come from healthcare sector. We're starting to see auto sales. So it's very hard to read the macro data these days because there's a lot of pull in demand. Auto sales was actually up 10%. Was actually up 10% in April and March, but started to decelerate because with the tariffs coming on, we can only assume that consumers will be starting to buy ahead of demand. So it's very hard to read the macro data. But similar to Singapore, I think the PMI is also starting to decelerate, which is an indicator of the forward-looking indicator of where manufacturing is headed. Next slide. So in terms of our equity strategy, we think the US equities is at the crossroad. I think we had a massive rally. Over 2 months, the US equities is up almost 7%. Singapore is up about 17%. So at such a humongous rally, I think the US market is just 2% shy of the all-time high. We think the US could probably breach an all-time high because we think the critical time will be this Monday. There'll be some upcoming talks on Monday between the US and China. Most likely, if we were to guess, most likely it will be positive because Trump has been plugging, saying he has good relationship with Xi. I mean, honor to welcome Chinese students back. I'm not sure. And then he suddenly says that, and then he said that expectations that the meeting will go well. So there should be some positive news that could help drive the market higher. But again, we are still cautious. I think Trump's policies can flip-flop, and the market is basically not pricing in any more tariff concerns. And also do note that on 12th of June, there's another thing I need to monitor, at least it is the expiry of the 2-month deadline for a US and Iran nuclear deal. So we're not sure what actually happens after that. As usual in our weekly strategy, we always just come up with some ideas. It's not a recommendation, but just food for thought, I guess. So we have if you're into contrarian bet, that means buying those stocks that are unloved and well headline risk. I think we saw that in, let's say, like US office REITs was really unloved. Likewise, for Chinese property was really totally unloved. But you do get some big rallies. I mean, they doubled over 3 months in September and October. So I guess one of the poster child of being a country or stock market that's unloved is, of course, Myanmar. So what we've seen, of course, Yoma is the only conglomerate listed that's operating in Myanmar. So this is not a recommendation, but just if you're into really contrarian bets, I think Yoma has faced virtually everything. I think the local currency in Myanmar, the Chat, is actually depreciated more than 50% since the coup in February 2021. Annual inflation, they had to operate in an environment where inflation is up by 25%. of course, you have the constant conflicts, not to mention a recent earthquake, and you got pandemic, very frequent blackouts affecting all operations. And of course, when the coup happened, they had a debt load of 350 million. So what they did was they sold non-core, and how they benefited was they sold 400 million of residential real estate. We have a non-rated report. But and why property has done so well is because during times of inflation, rather than keep the money in the bank that maybe earn 10%, but inflation is 25%, most households or consumers, they move into hard assets, and as a way to protect their wealth. And also most of their properties are well gated with good infrastructure, so that's why they managed to sell so much property since the pandemic. So one catalyst that might or might not happen is that is national elections. So if by end of next month in July, the authorities there were to mention end of the state of emergency, that makes way for 6 months for a national election. So of course it's debatable. This is going to be something similar to probably what happened in Thailand, where it's a military-run elections. But usually after the elections, it could be a precursor for foreign investors to come back in. I mean, they could use that as a reason. Once the election's over, then you can come in. So there's something to watch. We're not saying that this will happen, but again, they're disappointed so many years. But this is can be a positive catalyst if the elections happen. In terms of the events coming up, we have the US-China trade war on Monday. Then another will be the US CPI, and then the nuclear deal. Some of the corporate insights we have is, of course, Yoma, and then Capital Infrastructure, and Prosper Cap. Is open to anyone. Is open to the public. Next slide. Okay, this is just some charts illustrating the weak retail sales in Singapore is hardly 1%. Maybe even go to Johor. But the one that's doing well is construction. If you notice, so this is the rolling 12 months. That means contracts awarded on the annual basis or on a rolling 12 months. So you can see contracts in Singapore about construction contracts is up to almost 51 billion. So if you do year on year, this is up 50% compared to year on year. So that's why we have been like overweight construction, because we are playing this spike in construction awarded. The red line is actual work done, so that will eventually follow, but with a lag. So now contracts is reaching record like 51 billion. Next slide. So if you look at this chart, so this is just to show although interest margin might be under pressure for banks, but one offset is the strong loans growth. So if you focus on the blue line, it continues to grow. Although it's trending lower, but it's still, if you compare to maybe a year ago, this was maybe if at best 2% or sometimes even minus in 2023. But one concerning thing is that manufacturing activity is slowing down quite sharply in terms of the survey numbers, at least. So you can see the chart on the right. This is similar in the US too. Next slide. So in the US, the chart on the left is auto sales by months. So it will January, February, depending on the year. So if you look at the yellow line, it's basically the 2025 auto sales. But the observation here is that this could be an illustration of the pull in demand. So in January and February, auto sales in the US was probably 2% or less. Then in March and April, you can see this spike up here in yellow. It spiked up. So I mean, if everyone knows there's tariffs coming on, then everybody will start to buy autos, could be buying handphones and everything. So so it's very hard to use the hard data to know how's the underlying trend. But you do already see the slowing down in auto sales. So that's what we mean by things could be starting to slow in the US. The chart on the right is just the survey numbers. Shaded on the right is basically recession, but you will notice that things are sliding down quite sharply. But again, it doesn't mean it will continue, but it's just that we have seen a sharp deceleration in services and manufacturing activity and goods activity in the US. Next slide. As usual, after every month end, we will just illustrate the performance of the model portfolio. It's up about less than 1%. What did well for us was some of the commodities, and also the transport sector, like sets, have rebounded. What has hurt us is the property-related names like Propnex, Capital, CLI, and also WeHer. The one on the right is just the illustration of the performance against the Singapore market, which is the SING. Next slide. So again, this is just for illustration. What sectors did well last month? It was the transportation sector. The worst performer, I guess, is still REITs. Yeah, retail REITs. The one on the right is just to show you the gainers. The top 10 gainers, the top 10 losers. These are some of the more widely followed stocks. So of course, Kotla and I think Acrofy or whatever, I can't pronounce it properly, but I think they had some general offers. The weakest were like Unusual, Riverstone, and Bumitama. The top 10 gainers for at least the index names were SETS, DFI, Citrum, SIA. So the transport sector really rebounded last month when when there was a relief on tariffs, especially with China. The one on the right, the losers were actually a lot of consumer names like Genting Singapore, Thai Bev, and Jardine CNC, which is I guess now kicked out from the Straits Times Index. So these were the weakest. Next slide. Okay, so this is just illustration of all the various asset classes, how they perform in May and year to date. So the blue is year to date. So year to date, of course, gold is the best, still performing the best at 25%. What Nasdaq did well last month, it basically recovered all the losses, and for the year is just a small loss. The weakest last month in US dollar terms was at least Singapore REITs. Yeah, this is just again for illustration. But you can see from this chart, Asia Pac ex Japan or Asia is outperforming the US year to date 25. Next slide. If you look at this is just my last last slide. This is just in local currency terms how the Asian markets perform. So when there was relief on tariffs, I think the Southeast Asian markets responded, especially the big exporters like Vietnam that could have been hit with 40% tariffs, Indonesia. Surprisingly, Malaysia also was the weakest. But anyway, this is just for illustration. Okay, thanks. I think that should be the end. Thanks everyone. You can move on to question and answers if there's any. Thank you.
Yeah, let me go first. I think there's hold on. Yeah, there's one on the GE one. Yeah, sort of expecting this question, so thanks for the question. Yeah, so basically, if you're not aware, GE did finally, OCBC actually did, OCBC and GE finally did give this upsized counter offer for GE for the remaining shareholders, right? It's about 17+% higher than the previous offer. So this question is asking what is the outlook or next steps on the saga now that OCBC has blinked first with this new offer, and should the minority take the offer or wait out for $38? Yeah, so what's the outlook now? I think they have finally given this new offer, although maybe if you were to ask me like 6 months ago, right, I would say no, they were very adamant that they were not going to give an offer. But I think it was more of trying to strong arm some of the minority shareholders into not really strong, but scaring them into taking the offer, which they succeeded, I guess. Quite a few, I think they got about 5%, right? 5 or 6% of the total shares. So they got in about a bit less than half of the minority shareholders to actually accept their previous offer. And then now, I think there's a few, I think two, the largest single shareholder, apart from OCBC, that is holding out, right? They own about 2% of the stock. So I think that is the one that they couldn't scare them into taking the deal. Right? So now they have no choice, so they did up the offer. And I think the key question is that should you take this offer or wait out for $30? The fact that the independent financial advisor did give it fair and reasonable now, right, shows that well, yes, it is not, it's only 0.8 times of their embedded value. It's still slightly below, but if you look at the other factors, it is really still considered fair and reasonable. So I would say I don't think OCBC will give even higher offer at $38. $30 is almost like 20-30% higher than the offer that they're giving now, right? So I mean, you have to make your own decision, but I would say that I don't think they will be giving any new offer after this. Yeah. What's the outlook? And the next steps, I would say that they should be able to, you know, finally delist GE, and then they will just envelop it into the OCBC group, and we could see OCBC finally be able to enact their plan to, you know, have it fully integrated, you know, and I think they are just a few steps away from trying to complete that one OCBC, one group, they call it, which they have been saying so for the last, I think, year or so. Yeah. So I think for OCBC, they need to just go past this hurdle first of getting GE and delisting it, and then you know, they will take the next steps. And I think, if you ask me personally, I don't think they themselves are very certain where yet they're gonna go. I think they're just taking it step by step. So now they just want to ensure that they can delist GE first. Yeah, but next few steps, I guess, would be, you know, trying to really streamline the whole company, so that, you know, GE, you know, that there's easier ways of communication with OCBC, you know, and maybe with the RMs, where, you know, they can cross-sell better. So you might, you know, in the future see more, not like we don't already, but in the future you might see more integrated, where GE products are with OCBC, you know, wealth management products, investment products. Yeah, so that it could be, you know, everything would just be under the same sort of brand. Yeah, instead of now you have GE and then you have OCBC, so you have to choose one or the other. Although everybody knows that they are the same company. Yeah, so yeah. I think there's a few more here. There's one on Tesla. Yeah, what can we expect from the Tesla robotaxi event? How will it impact other players such as Waymo, Pony AI, etc.? Yeah, so I think, you know, the robotaxi event, you know, it's he has been saying it for so long that I guess people is firstly, it's already priced in, right? This robotaxi thing, and also, you know, it would just be a what do you call it, like just a soft launch, you know, where they are just, you know, they won't immediately launch it full scale, right? They will do it step by step in stages. So the reviews have to come in first from the public, not from, of course, not from their tests where they can control the environment. That's not a true review of the robotaxi. So it has to come out first, and where they're going to do the pilot launches, and then, you know, we'll see the reviews, and that's, you know, how the stock will be affected. But now, if you look at Tesla share price and the stock in general, it is it's not really I would say very fundamental. I've been saying this, I think, a few times already, but it's not very fundamentally based, because it's very hard to you know, when they have a tiff, when he and Trump, right, has a fight on social media, like on Truth Social and on X, right, you know, and you see the share price tank, you know, and when he says that he's going to come back to Tesla, the share price goes up and then goes down. So it's a bit really very hard to look at Tesla and look at the fundamentals. But I think now that he's having this fight with Trump, there's another question here also. I mean, I'll just answer it at the same time. Yeah, what's the main risk is that any risk of losing government contracts for both SpaceX and Tesla. The fact that he has really lost that 7,500 EV tax credit is going to be a huge ding to his to Tesla's bottom line, firstly, because the only reason why they were even profitable in the last quarter was because of this EV tax credit, right? If you remove that, if you remove that, as well as the government credits that they are giving, that they are able to sell back, right? You know, they would actually be loss making. So that's the reason that, you know, the margins have become so compressed, where Tesla, you know, is finally feeling the pinch, because they are not able to just give a sky high price and people will buy a Tesla like what they were in the heyday, right? So I think that's one of the main risks, is where they have to start to innovate more, right? They came out the new Model Y, right? And they have to start to really innovate more, and not just assume that they are number one, you know, and that people will buy their cars because of Tesla. Yeah, and the risk of losing government contracts, yeah, there's with Trump, right? There's a risk of anything happening, right? So now he has this fight with a very public feud with Elon Musk. It might be I'm not sure. I don't think it's very hard to predict what he's trying to do, but there is definitely a possibility that he could lose some government contracts. That tax credit was a big hit to Elon Musk and Tesla, right? So there's definitely a possibility that they could lose some government contracts. But I think it will affect SpaceX definitely more than Tesla, if you think of government contracts wise. Wait. Okay. I think it's a one or two more. Sorry, give me a minute. Let me just, the questions are all jumping around. Yeah, there's one on the Basel III regulations for treating physical gold as tier 1 assets. Oh yeah, sorry. Then I'll leave it to Paul whether is it positive for the gold price. Okay, how would the Genius Act, should it be passed, affect the US banks? Yeah, so this Genius Act is basically just it will just be significantly lowering the merchant fees on the Visa and MasterCard transactions. So, but I think the effect that it will be really more on the smaller community banks, where they will be squeezed by the big tech who will be entering the payment insurance. But the big banks, particularly, so you're looking at the big four, big three banks, right? Like JP Morgan, Wells Fargo, Bank of America, and Citibank, right? They will stand to gain because they already have the infrastructure, to the payment infrastructure. So I think this will better benefit the bigger banks, the GSIBs. Whereas the smaller banks, they'll start to feel the pinch because they will have to change their whole infrastructure and they have to put in more AML, CDDs kind of regulations to actually to make sure that they are in line with the laws and regulations. So the big banks will again, get benefit from this. Yeah. Yeah, there's one more on the Swiss bank. So yeah, so another one, the Great Eastern, should the minorities accept or hold out? I would say now that it's fair and reasonable, it's even more reason to accept the deal. Because I'm not sure if they're going to give another offer again. So, once it's delisted, it's going to be extremely hard to sell away your shares, right? So as of now, I think the fact that it's fair, reasonable, they raised it by 17+%, right? And there's only a minority. I think if that 2%, or that biggest minority shareholder sells it, then it's more or less assured that it will be delisted, right? So then, if you are really a very small shareholder, right, then it's a bit of the whim or fancy of that biggest minority shareholder. Yeah, sorry, the questions keep jumping. Yes, okay, there's one good one here on the Wells Fargo asset cap lifted. Yeah, it is definitely a big boost for the stock, right? I was saying that was one of the main catalysts for Wells Fargo, that with this new Trump administration, could it actually benefit the bank? And yes, you saw that we have seen the share price go up as well, right? So this will allow them to further expand, right, into their commercial banking, trading, wealth management, I think particularly their mortgage as well as their credit cards. Right, so a lot of the I think S&P has also raised their up rating to positive for Wells Fargo. We are also, now that they have finally released this asset cap, it will also be very beneficial for the bank. But then again, because loans growth is still quite low and quite muted in the US, right? It really depends also on the broader macroeconomic outlook, which will affect the bank. But particularly for Wells Fargo, the fact that they have lifted this will be beneficial for them. Yes, I got quite a few questions coming in for me. Hold on, let me just, sorry, I keep jumping around. Yeah, there's one more here on we don't cover UBS, but it's asking why is it up despite the new tough Swiss banking rules. I think the investors will probably be I think one of the reasons is that they are the largest, right, in I guess for Switzerland, so for the Swiss, so they I guess they will be better able to tide over these times. I think the main Swiss banking rule that was toughened was that they raised the minimum CET, I think, to CET1 ratio to 17 to 19%. So it's like opposite of what happened to Wells Fargo, right? They lowered the asset cap. Now for UBS, they raised it up, right? So now they have to hold more capital and they are not as, I guess, they won't be able to spend as much capital as they could before, right? So I think, I think the main consensus by the investors is probably that they are very well grounded and able to tide over this, and also because this implementation won't take in effect until I think 2028 to 2024. So depending on the timeline, yeah. So there's still quite a lot of time for the banks to lobby for it to be lowered, or to be even removed completely, because it really will take quite a lot of time for it to get implemented. Yeah, hold on. I think there's one or two more. Just let me answer this first before I hand it over. Yeah, there's one on NVIDIA. I think I'll let Iqbal answer this. Yeah, there's one question here. Perhaps Elon Musk has shorted Tesla stock and now buying back at significantly lower price. Yeah, I think he has to declare if he does that, but yeah, more of a statement than a question, but anything is possible for that. Okay, should we now accumulate Singapore banks vis-a-vis US big cap banks in terms of valuation? Yeah, I'll say in terms of valuation, US Singapore banks are really more of a dividend play, whereas US banks you're looking more at trying to see whether the bank itself can grow, right? In terms of the capital gains. But if you look at the Singapore banks, it's really dividends, right? You look at the earnings this year, it's not going to go up, but they are giving extremely high dividends to pay back their capital. For US banks, it's more of just because the only banks that we cover are the big banks, right? And they are still growing at a good pace, right? And they will be continuing to grow as well, right? Now that I guess Trump administration, they haven't really released much, but they are more favorable towards the bigger banks. So in terms of valuation, I would say it really depends on what you would want. For Singapore, it's really dividend, whereas for US, there's not much dividends that they will give. Yeah, it's quite low. And of course, the biggest factor also would be the foreign exchange. US banks is in USD, whereas Singapore is in Sing dollar. Yeah, okay, let me hand it over to the rest first before then I'll answer the rest later. Yeah, thanks.
Thanks, Glenn. I can take on some questions. Yeah, there's a question: does Broadcom has any competition on their Ethernet switches and any potential future risks for the future? For example, alternative to Ethernet switches. Yeah, so for direct competition wise, there is also another player called Marvell. Yeah, so for Marvell also provide us chips for Ethernet switches, and they are like a small brother to Broadcom. If you can think about it, it's a bit like AMD to NVIDIA for GPU chips. So for chips for networking, Marvell is a smaller competitor to Broadcom. So but Broadcom still has the largest market share. For your next part, any potential future risk for the future, for example, alternatives, I would say the biggest risk I can see now is the hyperscalers producing in-house uh network technology. So for example, they may be coming up with the ASIC chips. So they can program the chip to specifically provide a certain function, for example, networking within their own in-house capability itself. For example, Google and Meta has been trying to come up with this application-specific chip. So I would say that is an alternative to their networking switch as a technology. But I think other than that, I think in the near term, I don't really see any other replacement. Yeah. The next question is, how soon your positive outlook on US Semicon likely to spill over to SG Semicon such as Franken and UMS? Yeah, so actually we have been seeing this spill over as we talk. So currently they have been experiencing some growth. For example, Franken, as presented, their revenue grew around 20+% year on year. Yeah, so it's not a very tremendous kind of growth, but I think this growth will be quite steady in the next few quarters. Yeah. Let me see what are the questions. Yeah, so there's a question, what high bandwidth tester Grand Venture Tech is involved in? Is it sub-assembly for Advantech, Teradyne, or distribution of their testers? Yeah, we don't cover Grand Venture Tech. So actually they didn't really specify or make public about this information also. So I don't really know the details. Yeah. Sorry, I don't want to give you a wrong answer. Yeah. Yeah, so there's a question you mentioned about the prospect for memory and processor producers. What about the testers? I would think the testers you are referring here will be more for back end, right? Yeah. So if you talk about back end compared to front end, I never look at individual companies for tester producers, but currently the market for back end is about 1/3 compared to the front end. So the front end still has the most advanced technology. Like for example, the most advanced 2nm chips will require the most advanced front end technology to build. But for testing wise, it is also the technology is also still improving. Yeah, so the back end is also trying to catch up to the front end's progress. Yeah, but in terms of the market, that is hopefully it provides some insights to the outlook. Yeah. Sorry, the questions keep jumping around. Yeah, I think there's a question on what is your take on Nvidia? Yeah, so I'll cover that portion for Nvidia. Yeah, I do think that the overall growth outlook for Nvidia is still quite positive because generally their main revenue driver will come from hyperscalers capex investments in their data centers, and we believe that most of these investments will go into GPU racks. And I do think that Nvidia still is the market leader in terms of the overall ecosystem and performance of GPU. For example, their CUDA ecosystem is where most of the programmers are working on. And because they have so many programmers working in this ecosystem, that it's very fast for them to troubleshoot and code in this ecosystem itself. That's why they have been maintaining this market share. And even though in terms of raw performance, AMD's GPU may be able to match NVIDIA's GPU performance, but NVIDIA still outmatch them in terms of the software ecosystem itself. Yeah, and most recently for the Blackwell chips for NVIDIA itself, they unveiled the NVLink 72 rack. So this helps them to connect 72 Blackwell chips together, as compared to previously for the Hopper, they can only connect 8 GPUs together. So it's a huge multiplier. And on top of that, each Blackwell chip outperforms each Hopper chip by 3 times in performance itself. So the most advanced GPU rack itself outperforms the previous predecessor by 30 times. Yeah. So I do think that the outlook for NVIDIA is still very positive. And I think on top of that, what drives the entire AI demand is because TSMC has also mentioned that the rise of DeepSeek has reduced the cost for many small enterprises to join in the AI race. So there has been TSMC still sees a increase in demand for this AI workload itself. Yeah. So I do think that will also greatly benefit players within this space. Yeah. Sorry, need to go back to find the question. I think there's a question on WeHer. Yeah. Okay. So please comment on why WeHer has been underwater since ex-dividend. Yeah. For WeHer itself, so the ex-dividend price is, I mean the ex-dividend date is 8 March. Sorry, 8 May, right? Yeah. So 8 May the price actually dropped from 0.51 to 0.44. So this difference of 7 cents is actually the special dividends value itself. And this drop is expected because as investors, you will get the payout of these special dividends of 7 cents. So I believe if you are investors to WeHer, you have gotten this 7 cents per share dividend end May, right? 20 plus May, you may have gotten it already. Yeah, so this kind of drop is expected. Maybe you wanted me to comment why doesn't it go higher past this point? I um I would think in terms of risk for WeHer itself, the underlying risk for WeHer is still the worker dormitory because their current worker dormitory, the Tuasville dormitories, their lease is expiring in November next year. Yeah. So I think that may be the thing that investors are looking out for. However, we don't think that this will pose a very, very strong disadvantage right now because uh there will still be a 1.5 year runway for this worker dormitory to bring in rental income. And typically for this extension itself, WeHer will engage with the authorities 1 year ahead. So I think by the end of this year, we can sort of get a clearer picture of whether the lease for this Tuasville dormitory can extend or not. Yeah. And currently, WeHer also announced that they score some contracts in the construction segment, which is quite positive for the construction segment. Yeah. Hope that gives some clarity for WeHer. It's a question, why is AMD such a laggard compared to sorry. Yeah, why is AMD such a laggard compared to Nvidia? Is their expected catalyst soon? I would say AMD's 325 GPU chip is uh is on par with Nvidia's Hopper chips. Yeah, so I think they are just slightly behind in terms of Nvidia, in terms of performance wise, because Nvidia recently unveiled their NVLink 72, which is a big game changer. And I think we are still waiting for AMD to come out with a tech to match Nvidia. But I think this is the stock price performance wise lah. But I think in terms of fundamental revenue growth itself, as mentioned earlier, the general increase in AI demand should still benefit AMD because hyperscalers are also investing in AMD's GPU racks itself. Yeah. So and also there's also smaller enterprises coming in to buy GPUs cheaper. I mean AMD's cheaper GPU. Yeah. So we do think that AMD growth prospect is still there. What do you think of the fair value for Grand Venture Tech? Yeah, sorry, we don't cover Grand Venture Tech, so can't really give you like a good target price for this. Yeah, I think that's all for me for now. I'll hand over the time to my other colleagues. Thanks.
Yeah, thanks. And let me try to answer some. Sorry, let me find them. What is a fundamental view of CityDev? What is your call? Yeah, so for CityDev, we currently have a buy call. Yeah, target price is $6.02. For their most recent business updates, basically their property development segment performed very well. So year on year is almost 100% up in volume. That's mainly from the launch of the Ori. So in you look at the value wise, year on year is up 155% or so. So the property development segment remains strong for them. The hotel or hospitality segment also continues to improve with RevPAR still improving 1.2% despite the fact that Singapore was down so much because of the Taylor Swift effect. Because the Taylor Swift effect, as we know, was really strong last year. Yeah, and however for them right now it's really the gearing that they're trying to lower. So as we all know, they just over last weekend, they already proposed a sale of so it just slipped my mind what asset that was. Yeah, South Beach to IOI. Yeah, so that they're going to sell that development. So that's almost $1 billion. So they're going to use that to pay down their debt and lower their gearing. Yeah, so we think it's likely that there will be more asset monetizations to come, especially to lower their gearing, which is so high at 72%. Yeah, so that is that is our view. And if they manage to succeed by lowering down the balance sheet, we think it is possible that the discount to the RNAV will narrow, because now it's trading at a really steep discount to RNAV of over 50%. Like, yeah, just the book value is really $10, so they're trading at more than 50% discount to the RNAV. Any potential rebalancing for STI in September? Yeah, so STI they rebalance quarterly, but the most recent one, Capital DC got into the index. Yeah, that's mainly from the enlarged market cap, because remember they raised funds, so as a result the market cap grew also for the acquisition of KDC 7 and 8. So as a result, they managed to get back in. If you recall, they got kicked out in 2023. Yeah, so now they're back in, and yeah, you're right that the index is starting to look more like a bank and REIT index. Like banks already over 50%, REITs soon to be 10%. Yeah, so yeah, and definitely they do a quarterly rebalancing. So depending on what happens, yeah, there is a chance that it will be rebalanced in the quarter, like September. I think there was some, yeah, please comment on the FHD privatization. How likely will it go through this time? Should investor hold or cash out now? Yeah, because you see, the offer is at 71 cents, so the share price now is at 70 cents. If you recall back then, the first offer that it just barely failed by a couple of 0 point something percentage points. The previous offer that failed, that offer was at 70 cents. So now the offer now is at 71 cents. So I'm it's really hard to call whether this offer will get through, but I think this time around is more likely that we'll go through than last time, because of the fact that back then the recovery was just starting. If you recall, for the hospitality sector, like international visitor arrivals was starting to improve, and performance of RevPAR was still growing year on year. 2 years ago, it was almost triple digit as the previous year from a low base, so the growth was very high. But now we are in a current situation where a lot of the RevPAR is already coming down, because simply of the fact that the base is just too high, and it's hard to maintain a year-on-year growth. So going forward, also likely Singapore might see some lower RevPAR, especially for those higher end luxury hotels. Yeah, so as a result, we think, yeah, it is it seems more likely that this offer will go through at 71 cents. Yeah, so that's my view, but then again, it's hard to call what the investors will vote or shareholders will vote. So yeah, not surprised at 70 cents and the offer at 71 cents. So you have 1 cent whether you hold or cash out now. Yeah, but definitely, then again, if the vote, or rather the offer doesn't go through, yeah, it's extremely likely that the share price will fall back to whatever it was before. Wait, let me take a look. Yeah, highly likely it will just fall back to around the share price where before the offer was announced, probably around the 50 plus 60 cents. Yeah, so that is a risk. Yeah, I hope that answers that. I think that's all for me. I hand over the time to my colleagues. Thanks.
I will answer one question about Meta. So the question is about what is the outlook of Meta with the recent announcement of planned new AI acquisition. I do believe that you're referring to the report about the investment, 10 billion investment for Scale AI. I actually do since the details of the investment actually have not been announced yet officially, can't really provide the details of the revenue outlook, but I actually do believe that the move actually aligns with the Meta long-term plan, because what they want to do with moving forward, they mentioned during the earning calls, is that they actually want the brands be able to actually they want to automate the ads as well. So the advertiser will be able to fully create and also the target of the advertising through the AI. And then this is what Scale AI can actually do quite good. They are the leading provider of data lake learning. So and then I do believe that the investment of Scale AI can also help them with this AI capability in the long term. And Scale AI actually has a lot of hyperscaler clients as well. They are using their products because of the and then with their capex to invest in the AI. So I think Meta investment in Scale AI can helps to maintain a certain level of competitiveness as well. Yeah, I'll pass the time to my other colleagues. Thanks.
Alina, you want to answer?
Sorry, still reading through the question. Yeah, is Spotify and Duo? I'm not sure what's Duo. So I'll just answer on the Spotify part. Spotify, we do think it's a little bit expensive right now. We look at it in the long term, we do believe it's a pretty solid investment, but just looking at the short term, their forward 25 PE ratio is already 65x. So that is significantly higher than the average. We think the price is really high right now as people believe that during the tariff, they don't really have tariff exposure because they don't have cross-border intersection. That's first. And second, because people saw that during the difficult time, people might actually use this form of streaming service more because this is considered a lower cost method of entertainment. So what's happening right now in the macro term is not really going to affect them. It might even help them. So we think right now it's a little bit overpriced. So yeah. Sorry, this question keeps skipping. Will we finally see a lot of the Apple AI? Where they are going to have Apple AI update, but it's not going to be very dramatic AI. So they're going to improve their third-party AI written tool. There's also going to be AI optimization for the battery. So they're going to be able to sense when is a good time to remind you to charge. But these are like very minor AI features. The main AI features is actually already rolled out, and we haven't really seen a big splash on that. So we think Apple overall, we're still cautious because right now, we have the near-term headwind from the tariff. Also, they're elevating their capex because they're trying to shift more of their sourcing back to the US. And they're still seeing very persistent weakness in their products and the China market, which is not going to improve in the short run. Their fundamentals still remain resilient, but the rising cost pressure and the slowing down Apple momentum is definitely going to limit their upside. That's all from, oh, sorry. I think I'll pass to my colleague first.
Okay, yeah. Thanks, Helena. Let me try to answer some. Are you aware of any latest development on the potential merger of M1 and StarHub? Thanks. Yeah. Most likely, it likely to happen. I think they've talked about it for so long. Nobody knows the timeline. One crucial timeline is that both StarHub and M1 have to pay this spectrum. I think like M1 has to pay 200 million spectrum by end June. Again, we're not sure whether this might, if they do a merger, then maybe they could get some deferment of it. But one way to play the merger between, if there is a merger with M1 and StarHub, is just to buy Keppel, because they will be the big beneficiary. They get to sell, yeah, and of course Singtel to a very small extent, but mainly Keppel if you really, because it's part of their asset monetization plan. Yeah, be negative for StarHub in the near term. Yeah, because if you acquire M1, you're going to face usually a lot of huge upfront charges to integrate the IT, and then maybe some redundancy for staff and so forth. Yeah. The rumored timeline could be by because end June there's some spectrum, but again this rumor, I mean, it's all based on negotiations, and of course the matchmaking skills of their parent, because they have a common parent, so of course it's how the common parent of both companies force them to merge or marry or force marriage or whatever. Yeah, cannot comment too much. Yeah. Will upcoming high tariffs on Vietnam be negative for Valuetronics stock price? It will be negative, or definitely very negative. I mean, this yeah, because if Vietnam, I think supposed to be 40%, if I'm not mistaken, the tariffs, then the customer will definitely want to exit. So they might, in the near term won't happen, but the customer will definitely move to Malaysia where you can save 30% cost. So it will definitely be a big negative. So this will still be a big overhang because you still have the timeline of, I think, 9 July for conclusion of the end of the 9-month deferment of the reciprocal tariffs. Yeah. So there is definitely an overhang on them. With taco trades, that means do you expect investors to be less affected by the on-off tariff threat and drive more risk-taking in equities? If yes, which sector will benefit? Yeah, I think we've already seen that. I think the market has already gone past the 2nd April tariffs and breaching new highs. So that kind of worries me that the market is assuming you're not going to get much volatility for Donald Trump. I mean, like, how does that actually exist? Yeah, so that's why we're a bit worried. Although we think near term, there will be some positive conclusion to the US-China trade talks, because that's what Donald Trump is saying. But we'll be very wary of. I mean, he could just impose or any particular trade. But yeah, so that kind of concerns us that the market is virtually ignoring and using Taco as the kind of the baseline assumption that he will chicken out in any trade talks. Paul, is Section 899 of the Big Beautiful Bill a concern? Hidden time bomb behind glamorous tax cut headlines, increased taxes in American assets from foreign investments. Yeah. Yeah, thanks for that. I also didn't notice that maybe that's a way. So yeah, but Section 899, for those who are listening, is actually quite a very meaningful uh, tax new tax policy that the US is going to impose. So it can even affect us. So let's say we are Singapore, we own shares in US stocks, and for some reason the US doesn't like that we increase taxes on the US for any particular item. It's mainly on the Europe, like services tax or tax on digital taxes and so forth. Then they could actually impose taxes on the reciprocal country. So imagine if you own any capital gain, they could just tax on our holdings. So it's very broad ranging tax. And it will move the trade war to like a capital war kind of situation, where if you bring in capital into the US, the US government can tax you if they don't like, if you make any changes to your taxes that can impact them. So of course that brings the conclusion, who wants to buy the treasury bonds? They have to finance 2 trillion of government debt. So it just makes the situation worse. I'm not sure the rationale for it. So it's not final. You still have to go through the Senate. So if the Senate passes, then it will definitely be a negative. In the longer term, I don't think you see the big impact near term, but longer term, it makes US equities, any US assets, foreign direct investments, less investable. I mean, like, who wants to put a tax where you're not sure? You got no visibility where the taxes will be, or cost of operating. Any downside risk for US market investors seem to be complacent with Deco. Yeah, I do agree. I mean, that's my own view. I think they seem to be complacent that any high tariffs he imposes, he will dial it back, or any aggressive moves he makes, he will dial it back. Yeah. So that's why we're a bit cautious on the market, for me at least. Yeah. Okay. What is driving uptrend of Food Empire stock price while Wilmar stock price? I think there is probably two things. Coffee prices and sugar prices are trending down. More sugar or not. Coffee price trending a little bit lower. And the second thing is, I think maybe a bit more optimistic of the Russian situation. But one thing I I realized a bit late on Food Empire is that the two strengths that they had, maybe sorry if I mentioned this before, is firstly is the ability to raise prices. So when it comes to Food Empire, we're always very wary to initiate coverage because we thought of the Russian risk. But what they've shown is that they managed to raise prices even during the Russian war with Ukraine and all these issues with currency. And the second thing is, I think coffee is probably one of the best business to be in because it's very addictive. As a coffee consumer, we all know that once you want to stick to a particular brand, you're stuck with it. So there's one thing. That's I guess the two strengths of Food Empire that probably a bit late to realize. Why Wilmar stock price is down? I think a couple of things. They are still hinged on Chinese consumer, and that it hasn't really done particularly well. And number two, palm oil prices have been quite weak, and I think investors still prefer to buy a pure plantation company that move into Wilmar. And the third thing is that Wilmar is known for trading gains, but they did mention, at least in my view, that it's been harder to generate trading gains, especially with Donald Trump's kind of volatile commentary or policies. Yeah, so I think that these are some of the reasons, and of course, there's also this so-called land investigation, land worries, or agricultural land worries, not just for Wilmar, for all the plantation companies, that the Indonesian authorities might fine plantation companies if they deem it to have illegal land. Either they will confiscate or they will fine you. So that could be another overhang for Wilmar. Paul, why is non-farm numbers remain resilient despite immigration crackdown and tariffs? Will we see a deterioration in the second half? Employment numbers is a bit of a lagging indicator. So I still think you'll see some of it, and that's why we still think that the Federal Reserve will still do interest rate cuts by the year end. One of the reasons is that one thing about the tariffs is that tariffs, if it's like a tax, and it's a bit illogical for the Federal Reserve to raise interest rates, and at the same time you are facing higher tax. It's like Singapore imposing VAT 10%, at the same time the interest rate get propped up higher. Yeah. So you are like double tightening of fiscal and monetary. So that's why we think interest rates will still come down, but maybe at the later part of the year where it's a bit more clearer that there's a softer US economy. I mean, that's our base case now. Comfort and SBS Transit belong to transport sector, but are in the top 10 losers. What company specific issues did they face? May not be company specific, but the transportation that did well has been the airline transportation, especially cargo related like sets. So I think when the global tariffs were at least relaxed, I think airline transportation did better than land transportation, because that land transportation like buses, I don't think affected by the tariffs. So I think that was one of the no company specific issues. Maybe some headline, I wouldn't say risks, some headline noise. There's a bus contracting route for SBS Transit due being bidded out, and it used to be a negotiated bid and then now being tendered out. So there was worry that they might lose that. And of course, all this news of Grab starting their taxi service. So I think maybe that, I wouldn't say risk, but there's a lot of headline noise that this may have affected these two stocks. Yeah. Okay. Any thoughts on Circle Internet, which skyrocketed to $100 from IPO? Is it too late to? Oh, really? No idea, man. Circle Internet, yeah. I think this is about crypto. Yeah, sorry, we don't have an answer for you for this. Meow, any updates on 17 Live? Price inching up all the way. Apologies, she's on leave. The don't have really much to add apart from them really doing very aggressive share buyback. Sorry, she's on Lisa. I don't really have much color to add on that. Yeah. Okay. Sorry. Let me just run through. Can anyone comment on if Trump tax on stock gains, how will it affect? I don't think there's been any proposal for Trump to tax on stock gains. I think that's not him. I know Trump is very pro the stock market, so I don't think there's any proposal. It's more he want to cut capital gains rather than tax on stock gains. If you're referring to the section 89889, yeah, that is more for that is a possibility, or the risk, if like for foreign investors. What's your view on micromechanics going forward? Any adjustment towards their outwards? Okay, this is our general broad view. I think they are performing well because they are managed to make a breakthrough into the US, and this is even after taking some aggressive steps to realign the cross structure in the US. So in the US, why it's different is that micromechanics has normally been on the back end, that means packaging and assembly, and the front end where at front end, which is the equipment that is used in the wafer fab. So why everybody wants to go on the front end? Because front end is where the big margins are. I mean, like ASML, Applied Materials, the margins are 50%. So juicy the margin that even TSMC also want to grab that margin. So whereas back end the margins are, I think, maybe like, I don't know, 20% or something. So they are doing well because they are starting to move into front end. The unknown is that with a US manufacturing base, whether can they get more orders. So they're not they're a bit silent on that part. Any adjustments to I'm not very sure. They didn't really mention much on that. Yeah, apologies. I can't really help you on that. When will Hong Kong land be too expensive and one should sell it as it has gone up a bit? I think that okay. So Hong Kong land's book value is about $13.50, I think, or 50 something. I think there could still be more upside because again, not because Hong Kong office property is doing well. And you might even worry that there could be some headline risk if some issues with the new world development. But I think they are still selling assets. They are committed to sell. I think let me double check. I think 4 billion, if I'm not mistaken, by 4 to 6 billion by end 2027. And the CEO and the senior management compensation package is hinged on this. So you can almost not guarantee, but you can be rest assured that they're definitely going to sell a lot more assets. So I think there's probably more room for them to sell more assets and then use the money to do share buyback. So and I guess they're on paper, at least they're still far away from their $13.50 book value. So there could be still more upside, I think. Is there time to claim US Pharma? Yeah, sorry, US Pharma, we don't have an analyst covering US Pharma. Yeah, apologies for that. Yeah. Hi Paul, in spite of your optimism in Propnex, the price tanked for quite some time. In fact, downward bias. Any issues facing or in the industry as a whole? We don't see any issues. I think property sales, I don't have the main number because we don't have that to get the main number, which is probably going to be out soon. But so far April has done well too, even though in the middle of the second April tariffs. I think we are still positive. Just wait for very strong results coming out and maybe some dividends as their 25th anniversary is in July. So we are still positive on the stock. No real change in our view. Maybe the stock has run up quite a bit, yeah, before this. Yeah. So we were, I mean, slightly late in our call, I guess. What's your outlook for CSIN? So CSIN is covered by Meow Meow. I think we are still positive. I think this is like a high ultra growth stock. I mean a very strong, not high ultra, sorry, a strong growth stock. Of course they are doing sweet potatoes, and I mean go to buy a Chinese sweet potato. Why would in the world would you want to do that? So the main reason is because of food security. So what has changed for CSIN is that the government has been supporting the industrialization of food production, and CSIN has been a major. They they are not a farmers themselves, but they actually source, they help farmers grow sweet potato, help storage, and then help on the processing and so forth. So you've seen a huge jump in the production of sweet potato in terms of the volume and also the quality, the longevity, because the government has been supporting the industry with cold storage facilities. The next iteration of growth for them will be they have a project in Hainan where they are going to build something just as big as they have right now, their current, but they are more like a service operator. And second thing would be to use sweet potato as a feedstock, although some might say the protein level is not high enough compared to soy, but again, for food security, what we feedback to them is that they need to start paying dividends. I mean, so hopefully they should start to do it next year onwards. So the outlook is still positive. Yeah. Okay, I'll leave the rest to or the Takra and sets. Yeah. Okay. Thanks.
Yeah, there's a one on Takra. After your uplifting talk on Takra last week, the share price doesn't perform what to be expected, but it's going in the opposite. In fact, any miscalculation on your part. Yeah, so Takra, the share price when I initially was about 150 plus, so now it's about 140. So it is down a little bit, but we do expect a little bit of volatility now, especially since there are in advanced talks for the IPO of Gem Life. So yeah, there's still a lot of uncertainty there, but it is noted they just issued a news or an SGX announcement update last week. So on Friday last week, saying that they are in advanced discussions already, and yeah, so depending on that, if they manage to IPO, is Gem Life is valued currently at about 2 billion and looking to raise about 700 million. So that will really unlock value for Takra if that goes through. Yeah, and our target price is more of a 1-year outlook. It's not so much on short-term fluctuations. Yeah, so it is expected that there will be some near-term swings, especially since Takra is a relatively small cap company. Yeah, the beta spread is not that wide also. I mean, sorry, the beta spread, there's a lot of volume at the beta spread. Yeah. Yeah. Yeah, I think maybe we can hand over to TA to Sing. Yep. Thanks.
Thanks, Darren. Yeah, I'll start on the TA. So let me just share my screen. Yep, so first question is on capital. So I think last week there was a breakout of this 690 level after some consolidation over here. So I think we're still likely to see this continuation of this upwards trend move for capital in the near term. Yeah, and I think the next key resistance probably somewhere around $7.45. Yeah. For now, after this 2 days of bullish candle, I think we could see a bit of rest first, then maybe it could continue the upwards move. Next question is Hong Kong land. Yeah, so for Hong Kong land, also quite a strong trend right now. Price broke above $5.30 resistance. I think we still like to see the uptrend continue. The next key resistance somewhere around 580. Yeah, but for now, I think 530 will be the new support after the breakout recently. Okay, next question is on capital investment, CLI. CLI, I think it's still in the middle of consolidation price. Still holding this 251 level over here, but there could be a lower high resistance from this trend line at 256. So if this still hold as resistance, we might still see some consolidation between like 250 to 256 level. Yeah, but if you can take out this resistance, then the next it could see some rebound towards like 260 about there. Yeah, so for now, still most likely looks like a consolidation for CLI. Next question, UOB Kay Hian. Yeah, for UOB Kay Hian, I think there was a breakout above 186. Yeah, so after a few days of surge, I think there's some resistance around $2.02. So we might see some consolidation start to kick in. over here first. Yeah, but overall the uptrend is still pretty strong for this counter. And next one is Semiconductor Industries. So Semiconductor Industry also consolidation, breakout of a consolidation recently, the resistance at $6.73. So I think we are still likely to see a continuation of the uptrend to actually perhaps retest the main uptrend channel resistance somewhere closer to about $7.10 about that. That could be the next resistance to look at. Okay, next question is on WeHer. So for WeHer, I think there was some rebound of 41 cents, possibly from this upward support line as well. Price retested quite a heavy resistance area, right? It's 44 cents to 45 cents area, where previously this was a support consolidation before price broke down. So over here, I think we are likely to see the resistance over hold over here for a while, and maybe just consolidate sideways first with support at 42.5 cents for now. Yeah. And then next one for Yangtze Shipbuilding, I think last week there was quite a bit of rebound. So above, there was a gap up above this $2.13, and price actually retested this $2.31 swing high before moving sideways. So I think for now it's still pretty strong. We see the bullish candle is accompanied with large volume, but during the retracement, the volume is actually low. So this is a bullish sign. As long as price, I think, can hold along the 5-day moving average, currently is around 226, then it's still possible for price to trend higher. I think if it breaks the $2.31 again. Next resistance maybe around 235 to about 240 area. Yeah, then if it does follow this, if it does retest this wedge resistance, that could be around 240 as well. Yeah, so 235 to 240 next. Next one is some US counters. First one, Micron. Yeah, so for Micron, there was a breakout of this downwards resistance line over here at $100, but there's quite a lot of resistance acting for this counter previously because of the range at the high levels previously. So at this 110 to 114, there's quite a bit of resistance over here in the past. So I think in terms of upside, this could be the short-term resistance, while short-term support will likely be around $104. So we might see some consolidation at this area currently. And for Celsius, Celsius is it did a range consolidation between around $33 to $39, and recently there was a break above these $39. But I think so we could still see some upside, but some resistance could act around $42 for now, which was a prior resistance level. Yeah, so we might see some pause over here first, but if you can hold a breakout of 39, then there could be still some upside in the time ahead. Next key resistance after 42 will be around 44 to 45 over there. Yeah, then followed by around 48.60. Okay, next one, Novo Nordisk. So this one is doing a bit of rebound recently, but I expect some resistance because overall it's a downtrend, and price breakout of $70 recently, and it's nearing a retest of this 77. So 77 previously was a support breakdown of a range. 77 to 81, this area should have quite a bit of resistance if it comes to this area. So we might still see some rebound, but could face some resistance soon, and maybe just do a bit of pullback from there. Okay, next one is spot gold price. So for spot gold, I think is rather sideways, but it still remains quite bullish because price previously there was a breakdown below 3,240, but recovered. After that, it still continued to hold as support, and this could be a breakout of a bullish flag over here recently at 3,330 level. So if you can maintain these lows at 3,290 over here, then if it does rebound over here, I think it could be more bullish in the near term to maybe actually retest 3,430 and above to 3,005, which was this swing high at the end of April before price pulled back. Yeah, so overall, since end of April, price just been a bit of a pullback and consolidation, but it's still pretty light. I think it's down like 5% from the highs. Yeah, so it's still a bit of consolidation, but remaining more, the overall bullish trend is still intact. And for Citrum, it's a bit of range consolidation right now. So price still rebound for this 2002 support level. Testing this swing high resistance 2012 cents. $2.16 is also quite a bit of resistance in the past, back in March this year. So overall, I think we are likely to see some resistance hold up around the current price area over here. Yeah, so price might just do a bit of a pullback from this resistance area. And for oil tech, I think it's a bit of a range. So the general range is around 51 cents to 61.5 cents right now. So price, there was a surge on Friday and close to this resistance. So we might see some resistance over here. But support might come in from around, if it does retest 56 cents. Yeah. So still pretty range bound for the time being. Next one, Valuetronics. Yeah, for Valuetronics, also quite sideways for now. Some resistance holding at around the 70 cents to 71 cents area. But overall, the price is still looking quite good, higher lows along the way recently. So if you can maintain the higher lows around 68.5 cents recently over here, then that could be a good sign for price to break out of this resistance at 71 cents. Yeah, to continue the rally since April. Okay, then for Franken also looks better recently. So Franken, since breaking out the downtrend resistance line, price hit a very long consolidation between $1.12 to $1.17. So recently there was a break above it. So if you can hold above this $1.17 level, the next key level around $1.20, it could hit $1.23 next. Yeah. Then afterwards, the next key level may be somewhere like 127 to 120. Next one is Capital DC REIT. So Capital DC REIT mostly still in a consolidation with key resistance. There's a lot of resistance at $2.26. And the next key resistance around $2.33. So for now, it still looks like a bit of consolidation, but good thing is higher lows are forming. So this could be an ascending triangle formation over here. And so 2020 will be some support over here right now as well. So maybe still a bit of consolidation, but if you can maintain the higher low, especially above 220, then we could see some upside if it does break 226 thereafter. Okay, then there's a question for stocks on uptrend, example, Hong Leong Asia, how do we determine the technical point of entry? Yeah, so for generally uptrend counters, they will tend to respect previous resistance as supports. So that could be an entry. So for example, over here recently broke above 120 after a consolidation. So this, if it does retest this level, this would likely be a support to consider as an entry. A second thing would be that it will tend to trend along some of the short-term moving averages from the 5, 10, or 20. So depending on different counters, they will tend to trend along the different MA. So for example, this one might be the 20-day MA over here, this yellow line. So that might be a potential entry level as well, somewhere close to like 118 right now, which is also go close to this breakout level. So yeah, these are some of the consideration I think you can have for uptrend counters. Yeah, and for Hong Kong Asia, the T right now still is a test of 124 again, uptrend, and we could see it test 130 next as the next resistance here. So just this one is just a range consolidation breakout kind of counter. Okay, next one is the TA for the 3 local banks. Yeah, so first half DBS still remains the strongest. Yeah, so a bit of a consolidation, but price is still trending along the 5 and 10-day short-term moving, so very strong trend. And close to retest the resistance over here, 45.50. So we might see some bit of resistance, but I think we could that it's still quite possible to see higher highs ahead. Yeah, given the strength, and there was a bit of consolidation over here recently. So above that, the price could still trend to somewhere like above 46 to 47. Yeah. If it does follow, if it does retest this channel resistance, yeah, that will be somewhere like above 47. Then for UOB, it's a bit weaker. So UOB just still very sideways over here. Key resistance around 35.90 as well as maybe 36.30. It does retest this downwards resistance line. But for now, still pretty much sideways at around 30, just the trading between 35 as a support and 35.90 as resistance. Next one, OCBC also pretty much sideways. So we're just holding between 1610 to about 1640 right now. 16, then there's still a resistance upwards like 1660 and 1690. So I think for UOB and OCBC, we could see still the sideways consolidation still persists, but I think DBS we could see some strength continue for it. And for SIA, a bit of a sideways consolidation after a strong rally. Yeah, so we might see just some sideways movement around like $7 to about 7.20 this area. Okay, the next one is on Mapletree Industrial Trust. I think generally quite sideways. Yeah, generally quite sideways, but possible break of a short-term downwards resistance line around this 193. So we could, if this holds as support at 193, then we could see some bounce here, but still got a lot of resistance over like 196 and then around $2. Yeah, so I think it will still be quite a tight range ahead, I guess. Next one, Mapletree Logistics Trust. So Mapletree Logistics, nothing much, just moving very sideways, very tight range as well, around 108, and resistance probably around somewhere like 113 over there. Yeah. So nothing much for now. And CICT, yeah, for CICT, also just quite sideways, $2.06 and some resistance around 212, 2012. Yeah, above 212, the next key resistance maybe 217 and 220. For now, still looks like a range consolidation. Okay, then there's a question for PhillipCapital, 杨子江 should be in capital. Okay, Zixing haven't come there. Zixing I think should be doing, is still overall quite bullish. So since the breakout of this 0.029 price has been running upwards and also managed to clear this 0.031, 0.032 previously very strong resistance. So this, I think for now will turn into a very strong support. And currently looks like a bullish flat consolidation. Yeah, so 0.031, 0.032, this will be a strong support area for now. 0.035, 0.036 will be the resistance. Previously, I think there was a swing high at 0.035 around there. So price will likely do another round of sideways first, I guess. Yeah, given the large volume, there was high volume recently, then there was a bit of pullback on low volume. So coming back here, we'll likely see some resistance again. So quite sideways for now. Okay, then there's a next one is on Barrick Gold. So yeah, so now he changed to Barrick Mining. So for Barrick Mining, for now, I think it's still pretty range bound. Price broke above this $19.30, some resistance, but the main resistance still holding around $20.90. So really range bound still, we might see just some consolidation sideways. And next one is Corning Incorporated. So for Corning, I think it's trending along this uptrend channel over here. Price recently broke above some resistance at around $50. So it could still continue uptrend to hit the next key resistance, maybe somewhere at 52.50 to about 53 370 area. And there's also a question about NVIDIA. So for NVIDIA, I think it's still holding the uptrend over here. Now, price is still trending along the 5 and 10-day moving averages. Pull back after the results, tested 135, found support. And last week rebounded back to retest the 143 level. Yeah, so over here, you could see some consolidation, but if it does break above 144, the next resistance to test will be like 148 to 153. So previously, this was near the all-time highs where 148 to 153 was some resistance over here to watch. Yeah, so I think for now, still holding the uptrend, a bit of consolidation first. Yeah. Okay, then there's a question. Yeah, with the bad bromance between Musk and Trump, do you expect further downside on Tesla stock going forward? What's the potential support level? Yeah, so Tesla stock very volatile. What's the next? For now, last Thursday, during the drop, it retested this previous resistance zone around 270 to 295, this area, temporarily finding some support. But I will expect some resistance for any rebound now, because actually there was a breakdown of this short-term momentum. When price below the 10-day moving range, around 340, also break down below this 330 level. So 325 over here might be a key resistance for now. Any more downside, I think there could be if there's another break on this 270 level, then we could be looking at around somewhere closer to 220 next as the key support. Yeah. Okay, then next one is on SGX. So for SGX, I think nothing much right now. Still range consolidation between like 1370 and some resistance right now around $14.30. The next key resistance around there. So next key resistance above that is around 1460 as well. So I think just still consolidation sideways, but in terms of the longer term trend, is still maintaining well within the uptrend trend. And next one, Comfort Delgro. Yeah, Comfort Delgro a bit of a sideways after a pullback recently. So price below this 145, which would be a resistance, and support wise would be around close to 137 to 140 area over here. Yeah, which is also our support line level. So we might just still see some consolidation sideways for now. Okay, the next one for UOL, price I think still generally pretty strong after a breakout of this 578 level, a bit of sideways perhaps for now. Next key resistance around $6, price at around $6.22 for UOL. So after a few days of rally, we might see some consolidation at the highs here. Next one is on CNMC Gold Mine. So for CNMC, I think it's been on a bit of consolidation recently as with gold price as well. Yeah, just I think for now support will be around 42 cents, which was this resistance over here turned into support, and yeah, for now current resistance 44.5 cents. So I think it's still okay. Just range consolidation. If you can break above 44.5 cents, then it could retest the highs close to 47 cents. Yeah, just a bit sideways recently. Next one is on Geo Energy. Yeah, for Geo Energy, I think still uptrend, just moving a bit. It is a bit sideways and up at the same time. Yeah, but we still see higher highs. Possibly this could be trendline resistance. Then for now, just holding support around 36 cents, which was resistance over here. So I think maybe sideways between 36 cents to 39 cents for the time being. Yeah, then if it tests this trendline resistance again, the resistance could be around 40.5 cents about that. Yeah, so just a gradual uptrend, I guess, for this counter. Next one is Venture. Gap Venture, I think after the gap up since the holding announcement, just moving sideways by 91.5 cents. This previous recent time to support, and around 93.5 cents is a bit of resistance. So just moving sideways, if you can break above this 93.5 cents, then we could see a continuation of the trend upwards. Yeah. Then the next key resistance for that might be somewhere around $1, then followed by $1.08. The next one is CSE Global. For CSE Global, I think overall very range-bound counter, but some positive signs recently test out this 47.5 cents resistance. So if here should be still facing a bit of resistance after a strong surge. We are likely to see some sideways consolidation. But you can hold support around 45.5 cents to continue a higher low, especially at this prior resistance, then that will be a positive sign for that for price to maybe break to make high highs in the future. Yeah, the next key resistance will be around 49.5 cents and 51.5 cents. Okay, then next one is some stocks listed in the Bursa, Malaysian Pacific Industries. Yeah, so for Malaysian Pacific Industry, I think overall it's a downtrend counter, but a bit of a rebound recently, and finding a higher low support and higher resistance area around $17 to $18. So I think we're likely to see test this around $22 this resistance again in the short term. Then we might see a pullback, consolidation sideways afterwards. The next one is on Aeon Credit Service. So for this counter, it's also trending downwards as of now, but turned to a sideways range. This 560 is a strong support, and we are likely to see it test this level again. Then we could see a bit of rebound afterwards. Then for now, 575 and 588 will likely be a short-term resistance. Then maybe just see a continuation of this sideways consolidation. The next one is Ellington Group Berhad. So for this counter, it's moving sideways with a lot of resistance at around 352 to 360. So I think that will still continue for now, but good thing is a bit of higher lows over here. Continuation from the break of 310. So if 338 can still hold as support, and that will still be positive for possible breakout in the future. But for now, still looks pretty sideways between like 338 to 361. Then there's a question on LHN. Yeah, for LHN, I think it's still trending up, perhaps trending upwards in this uptrend channel for now. Positive is that broke above this 51.5 cents resistance. So just trending upwards for now. For now, it might face some resistance somewhere like around 57 cents. Then it might consolidate sideways afterwards. Overall, still kind of bullish price action recently. Okay, then some TA for the indices STI, KLCI, and Hang Seng Index. So first one, STI moving sideways generally, but I think still positive. Because still seeing higher lows. And this 3,890 level still looks like a support. From this resistance at the middle of May last month. So bounce off from this resistance moving higher. So I think we likely to see the index move higher to test this 3,956 level again, which was a gap, the intraday highs during a gap up on 13 May. This was after like the US China meeting. Yeah, so with that, we still like to see, I think we still like to see STI trend high to test these resistance. And the next key one will be around the 4,000 level, which was the all-time highs before the pullback in April. Okay, then next one. For KLCI, I think it's a bit weaker. So the pullback didn't hold this 1,530 level. So this will be still short-term resistance. Then I think it looks to be a bit sideways for now. First at 1,500 is holding a support. Yeah, so maybe just a bit sideways, but no signs of bullish strength yet. Then for Hang Seng Index, yeah, so for Hang Seng Index, I think regaining a bit of strength. So it was a upwards move, then it turned to a sideways consolidation. Holding support at least close to 22,700. This key horizontal level, which was the previous support level. And last Monday there was a hammer being formed and subsequently broke out of this resistance, quite a significant resistance at 23,700. So I think we could see this upwards move continue to try and retest this previous double top at 24,660 area. Yeah, for Hang Seng Index. So yeah, it's about, okay, I'll talk about one more is crude oil. Then I'll hand over time to my colleagues since about one. Yeah, so for crude oil, I think generally still very sideways. Overall has been on a downtrend, but resistance started to hold at this 65 level because this was a previous strong support with 65 to 67 area. Yeah, then this has turned into a resistance that is quite strong right now. So I think over here still we could still see this 65 to 67 hold as resistance and maybe more sideways kind of price action. Yeah, so I will hand over time to my colleagues if there are any more questions. So I am able to take all the TA counters in view of time, but feel free to post them in our Poems 3 technical analysis committee. Yeah, thanks.
Okay, thanks everyone. I think we addressed most of the questions. Some of them I typed it in. So with that, I thank everyone for your time. Hopefully the session was useful for you, and hope to see everyone next week and have a good week ahead. Thank you, everybody. Bye bye.